Kitco Mining's special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.
Hello and welcome back to Kitco Mining with me, Paul Harris, at the Vancouver Resource Investment Conference from Vancouver in Canada. Joining me now is someone I always enjoy interviewing and someone I really learn a lot from. Grant Williams, author and host of the Grant Williams podcast. Grant, welcome back to Kitco.
How are you, my friend? You well?
I'm very well, thank you, and Happy New Year.
Well, and you know what? Larry David would go have a fit if he heard us saying Happy New Year after the 7th of January, but I will accept it and return it to you. Happy New Year, mate.
Time passes fast enough. Let's celebrate things while we can. I want to start off by thanking you for a couple of things.
Oh, okay.
First, for turning me on to the Rest is History podcast. You mentioned it during one of your podcasts, and I went and found it and have been listening to it non-stop ever since, much to the chagrin of my wife. And second, for the podcast you did in October with David Murray, a historian, focusing on China. That was very, very informative in many, many ways. I really recommend all our listeners and viewers to go and dig it out. It's you made it freely available because there was such good feedback about it. It's something that everybody should listen to. And I want to incorporate some themes from both of those aspects into our conversation today. One thing that comes out from listening to The Rest is History, for example, is that history always repeats itself. The times and circumstances may change, but the challenges and how the key actors respond to them don't really. This is true in economics and investment too, obviously, because we routinely talk about cycles, and by definition, the word cycle implies repetition. Grant, so let's start there perhaps. Where are we now in the commodities cycle, and what analogies from the past can we look to perhaps understand the current circumstances?
Yes, great question. Yeah, the commodities cycle is more like a kind of, or it feels like it's been more like a flat tire. It kind of goes round and then there's a big flat part at the bottom. We've been bumping along that for a long, long time now. You know, there's every year it seems there's a good reason to believe that the commodities cycle is going to see an upswing, and we haven't seen it. Not materially. I think that's going to change, but I can't guarantee when. It feels like we're getting to a point where people are going to start putting money to work in commodities again, if only for the fact that the equity markets, particularly tech, are so overvalued, and the debasement of currencies is happening at a much, much faster rate, and people are going to want to own physical assets. So, that's always a good time to be in commodities. We're here in Vancouver at the VRIC, and it's packed to the rafters. I mean, this is the busiest I've seen it in a long, long time, which tells me that there is a lot more interest in commodities. There may not be an awful lot of money to work here, I don't know, but to get people off their couches in the middle of January and come out here and in the cold and come to an investment conference for resources, it's a great sign. So, I'm hopeful that 2025 will see some decent performances, but I don't think it's going to be a rising tide that floats all boats. I still think there's a terrific tailwind behind precious metals, particularly gold. Silver I think will catch up at some point, but I think the weight behind gold is very much safe haven buying. It's not necessarily anything more than that. I think the energy markets are going to be interesting this year with Trump back in office and doing what Trump does. Canada with Trudeau out of office, and we'll see what Pierre does, who I fully expect to win, but I think there'll be a shift to energy policy in Canada. And when you look across in Europe and you see what a problem energy policy has been in Germany, for example, the pressure is really on for people to shift energy. So energy is somewhere that I think in 2025 is going to be a really, really good place to invest.
Now, the sort of geopolitical narratives transcend the supply and demand dynamics of many commodities, particularly in sort of precious metals. And you mentioned many things there that we can sort of follow up on. Trump sworn in this morning as the 47th president of the United States, and he's been given his right hand a good workout, signing executive orders about this and that. I've been looking at news streams around the world, and everybody's responding and retaliating to his things about the Gulf of America and wants to take Panama, and this is now a terrorist organization. Well, the dust is going to take quite a while to settle. But one of his key targets, if I can put it that way, has been China. So let's start with China. China's obviously the elephant or the dragon in the room. And he's been threatening tariffs against China polarising the geopolitical scene, turning the soft, fuzzy neoliberal world of international cooperation, which we've seen over the last 30, 40 years, on its head. And this was a key theme in your podcast with David Murrin. David Murrin said that the Western world has been anaesthetised by cheap prices from China and blinded to his master plan, which is, I'm going to paraphrase him, is basically world domination. And I recall Jet Li's film Hero from 2002, in which he plays an assassin called Nameless, who was sent to kill the king of Qin, who violently unified the territory that today is known as China. Nameless's hand was stopped when he suddenly understood Qin's vision, which was all under heaven, a united China. In the present day, it's perhaps we could talk about that vision as expanding, as China's concept of all under heaven. Is that enlarging?
Wow, Barry Norman, eat your heart out. We're doing film reviews now. I love it. Yeah, look,
podcast is entertainment.
Well, absolutely right. Look, China's endlessly fascinating, right? Because we all have an opinion of it. None of those, or very few of those, are formed from any real experience in China. It's formed from what we read and what we put together, and opinion pieces that we might come across, and other people's points of view. So it's really difficult to get a real sense of China. What is China? We don't really know. And Xi Jinping, for all the opinion pieces written about him, again, he's something of a mystery to us, because he's not like Donald Trump. We don't see him on the TV every day. We don't see every single thing he does. Now, he's been pretty clear, if you read what he's written and you read his speeches that he's given to the plenaries and stuff in China, he has this vision of a very strong China, and I think we need to take him at his word. I'm not sure with David, I push back against David, this idea of total domination of the world. I think that's a bit of a stretch, to be honest with you, because I just don't see how that is feasible from a practical standpoint. To try and marshal 1.4 billion people is tough enough. To try and marshal 7 billion people, it was beyond the Romans, and there wasn't that many people, but the distance is involved. So this era of empires, I think is perhaps a more interesting idea to explore. In that, are we seeing the beginnings of the end of the American Empire? We had the Roman Empire, we had empires before that, we had the British Empire, and we've had effectively the American Empire since the end of World War II. And what I feel viscerally in recent months is an acceleration into the end of the American Empire. And that's a difficult thing for us to think about and talk about and kind of ponder through, because it's all we've ever known. We've only ever known the American Empire. We've only ever known a preeminent America, incredibly dominant on the world stage. And so it's hard to think of a world where that isn't the case. And yet, wherever you look, there's increasing conflict around the world. America is being pulled in a bunch of different directions and proving that it can't continue to be as deeply involved in all these conflicts as it once was. It doesn't have the will, for the most part, but it doesn't have the money to do it anymore. We've got a president sworn in today who is an anti-war president. Trump is very much anti-war. He's a saber rattler and he's a bellicose guy, and he's going to talk tough and he's going to rattle his sabers. But ultimately, I don't think he wants war, which is going to be interesting. And we've seen, in the past couple of years, when Trump's talked about, I'm going to bring the troops home. I'm going to stop the Israeli-Hamas conflict. I'm going to stop Russia-Ukraine. I'm going to bring our troops home. I'm going to make other countries pay their fair share of the defense budgets. The response to that from the American people has been wholly positive. People don't want to be involved in endless war. So what you might well find happening is just this period where China becomes a bigger and more important player in the Asian theatre, and America retrenches home, focuses much more on trade between Canada and Mexico. It's still going to have its role as the world's policeman, but I think you're going to find places and hotspots and conflicts that Trump just says, no, we're not going to get involved the way everybody once assumed we would. I don't think that counts for Europe. I think they will still be involved in Europe if there's any conflict in Europe. But I think maybe the Middle East and Asia, they will gently try to ease back and not be as deeply involved.
I think an interesting thing there, expanding the concept of all under heaven to the whole world, yes, perhaps is a bit of a stretch, but expanding the concept of all under heaven to its backyard is perhaps not so much of a stretch. China claims pretty much all of the South China Sea as it says its traditional territory, its traditional range of influence. So it does seem very focused on that, and perhaps in some kind of a modern version of America's Monroe Act, where the Monroe Act, no foreign intervention in the American hemisphere. Yep. China perhaps wants a similar hegemony in the Asian basin, out of the Asian, getting the United States influence out of the Asian basin. And it's interesting, I think, your comments on Trump pulling back on war in different foreign theatres and the American people responding to that, because that echoes back, of course, to the America pre-First World War and pre-Second World War. They didn't want to get involved in foreign conflict. And so, it does seem that is really resonating with people, which if that does follow through and end up being the case, then does that create a situation where the US will stand aside and let China have South China Sea or the Asian basin?
Well, that's the $64,000 question. And the fact that Trump has already said he wants to go to Beijing and meet with Xi Jinping, I think is encouraging. If America decides to stand aside, which I don't expect them to do completely, but I think there's going to be a lot of encouragement for countries in Asia to try and negotiate and sort terms out on their own. And this tariff round of tariffs that Trump's promising is just going to start those discussions happening everywhere. The problem we have is that in Asia there's plenty of kind of historical animosity between the Chinese and the Japanese and the Koreans mostly. The three kind of bigger powers in the region.
It's like Germany, France and England always at war.
Well, exactly right. Now, Germany, France and England found a way to coexist together. The EU was a big part of that. And again, we're reaching a point where that is starting to fragment a little bit now with Brexit and all the various pressures on the European Union. But in Asia, they didn't really find a way to live together. They were almost forced into living together in peace by that American influence. America being in Japan, being in Korea with big troop bases there, kind of nullified a lot of China's muscle flexing. That could change. And I think if America pulls out of Asia, it would be a big problem in terms of how much antagonism, how much conflict we'd see. But realistically, all this comes back to economics. Look at America. Wars are expensive, right? And what we've seen in the last year, as we've seen the hurricane go through North Carolina, we've got the Palisades fire in Los Angeles, and we're seeing billions after billions after billions sent to Ukraine, and American people are noticing this. They're noticing that there was no relief for North Carolina, for Asheville, after the floods. And within a few weeks, we're signing another $30 billion check for Ukraine. People are noticing that, and it matters. And America doesn't have the financing available to just throw money at all these problems, so they're going to have to find a way to prioritize. And I think that prioritization is going to be what every country does when there's a conflict between international politics and domestic politics. Domestic politics always wins, because the domestic audience is who votes you into power and keeps you in power. So I think we're going to see that. I think we're going to see an increased focus on domestic politics by the US, by just about every country as kind of purse strings get tightened. What that means for the world is anybody's guess, but I think we can all safely say it means more uncertainty, it means more risk, it means more volatility, and it means more and higher chances of a miscalculation somewhere, a fighter jet flying too close to another fighter jet, all these things could happen. And in periods of financial weakness at home, wars are always very convenient things to refocus people's attention on. So people have to understand that we've lived in a very benign world, and it's felt a little bit chaotic in the last few years, but I keep saying this.
Is that the return to the mean?
Well, it's not that. It's I think, come back to your cycles point. We're at the end of a cycle, a war cycle, and as you approach these climactic events, things pick up pace, and you can feel that. You can feel things happening faster, closer together. There's more news about conflict. There's more news about this has happened, that's happened. And it's not just normal social media nonsense. It's happening, and along with geopolitical lines being redrawn, we're seeing the financial markets being completely reimagined. This Trump coin this week. I feel very strongly that was, or it's going to be a pivotal moment in financial markets. I think that to me was a sign that we're nearing this kind of peak greed, peak disregard for consequences.
I'm sorry, Grant, I have to say this. I think you're showing your age there. You're out of date. It's no longer the Trump coin. It's the Ivanka coin now.
Oh, Ivanka, we're onto Ivanka now, are we? Well, he's got a few more kids, so we'll work our way through them. But it's just the idea that you can create $60 billion out of thin air overnight is the kind of thinking that happens at the end of cycles. It's the kind of thing that happens when the greed gets too much and the kind of pursuit of easy money gets too much, and the unwillingness to work for to get wealthier gets too much. And it feels to me like we're there.
Now, David Murray, was very critical of Western governments and countries that had facilitated China's rise, effectively disbanding their industrial capacity to take advantage of lower labour costs, principally in China, and allowing China to go strong. Trump has been one of the few voices calling this out, demanding companies reshore or redomicile or things of that nature. In this context, is Trump the smartest man in the room here, or is he maybe a case of an expert in manipulation and doublespeak, recognising somebody else that's doing it?
Look, there's a room somewhere in which Trump is the smartest man. I don't know which room it is, and I don't know who's in there with him, if anybody. But look, I think, being serious, I think David's right. I think Western governments have enabled the rise of China through this desire to, produce cheap goods for people at home and keep costs down. And the idea of reshoring your business, I don't necessarily think that Trump decided that was just the best thing to do. It's a means to an end. It's a response to a moment in time where COVID demonstrated to all of us that supply chains being reconfigured the way they have, that they all go through China, is a very bad idea in a crisis.
Well, this is becoming the ground lines of the next level or next stage of East-West competition. It's critical minerals seems to be the battle lines that are being drawn there. And it's even made it onto the cover of the New York Post last week with a headline of China's iron grip on critical minerals puts the US in an unfathomable national security bind. Trump's going to be all over this. However, with the competition...
Greenland. He'll get more from Greenland. It'll be fine. When he buys Greenland, this will all be okay.
I don't have a comeback for you there. Let me continue with what I was going to...
Carry on.
The Biden administration, critical minerals became a really big thing in the US, and he passed the Inflation Reduction Act and other policies to help facilitate the exploration, the development of critical minerals, war materials, things of that nature. Trump's spoken out against IRA, but he's, I would say he agrees with the narrative of having domestic US production of materials that are used in munitions, basically. How do you think he's going to play out on this? Is he going to seek to continue these incentives, seek to continue the reshoring of supply chains to either domestic or friendly countries?
Well, does he have a choice? I mean, that's really the way I think about this. He doesn't really have a choice, I don't think. It's difficult to... If your number one threat is a war with China and your munitions supply chains go through China, you've got a real problem. You need to deal with it. It's not something you can think about, well, maybe we'll do that if the numbers work. You just have to do it. You have to be able to onshore all the critical processes that supply your war machine, supply your defense machine, whichever way you want to do it. It used to be called the Department of War, and they changed it to the Department of Defense. So I think Trump is coming into office, and there are a lot of big issues that he doesn't have a choice. It's not a question of, shall I do this? It's a question of, okay, I have to do this. Reshoring critical parts of the supply chain is absolutely one of them. It's already begun in places, but of course the flip side of it, for Americans, it's going to be very inflationary. It's going to increase the cost of everything to them at a time when inflation is a big, big problem politically, and in real terms for the people living in America that can't afford to feed their families already without things going up double digits. So Trump's going to have a pretty tough ride, I think. Whoever would have been the president for the next 4 to 8 years is going to have a tough ride.
Now, one of the things President Trump has said, he wants to shorten permitting times for mining projects in the United States. And again, with the benefit of history, we can look back to the First World War and the Second World War, and the US government used basically war acts to get mines into production, to produce antimony, to produce tungsten, things that are needed in the munitions. That would seem to be a very good way to circumvent permitting times. Apply war acts to say we need it, get it done. Is that a real option, do you think, over the next 4 years?
If you've got a war, yeah. If you've got a war, that's a great excuse for a war act. But it comes back to my point. These wars can be very convenient things to have, and sometimes it takes that kind of presidential power to get things through. We're about to see this in California as they try to rebuild all these homes that were lost so tragically in the fires in the Palisades and down in Malibu and places. The way things are in California right now, with permitting requirements, etc., there's not a chance in hell these homes are going to get rebuilt. So something's going to have to change, and they're going to have to find a way to get this process changed to allow the things to happen that need to happen, and mining is probably going to be one of those.
I've read that California is looking at suspending some of their environmental legislation to facilitate the speedy rebuild.
Yeah, and this is it. When you have times of need, if you'd have said to anyone in California before those fires, we're thinking of suspending some of our environmental, place would have gone up in arms. But suddenly we need to do it. It's very different in times of need. So this idea of need and policies being couched in terms of we need to do this, I think you're going to see a lot more of that, and much of it will be need. But once politicians realise that need is the magic word, it helps them get stuff through. You wait to see how many times you say, well, we need to do this for the good of the country. It's going to happen more and more.
Now, David Marin, you spoke with him about, you recorded that podcast before the presidential election. Yes. So you're talking about Trump and Kamala Harris, and I think one of you thought Trump would win. Marin
I was pretty sure Trump would win, and I was surprised that David
was pretty convinced Kamala would.
Now, but Marin spoke of Trump as a narcissist bent on total control. And I want to bring in another popular entertainment analogy here, if I may, and that is The Sopranos. In The Sopranos, Tony Soprano is the mob headman. His therapist stopped treating him after she read academic research that showed high-level criminals cannot be treated because they are narcissists. Yeah. And in fact, therapy empowers them. So Trump is president, he's a narcissist. Narcissists want total control. So we got 4 years of Tony Soprano in the White House sorting out the world.
I feel I should lie down on the couch if we're going to carry this conversation on the way it's going. Look, I'm not qualified to define Trump clinically or medically. We've all seen how he gets things done, how he behaves. We've seen, it's undeniable. You don't have your name on everything that you own unless you have a certain ego, a healthy ego. You don't run for president unless you've got a healthy ego. So I would imagine that there aren't too many people who run for office as high as that don't have a narcissistic gene in them somewhere. The question is, what does it mean for us? And I think when you look at what Biden's done with the pardons on his way out of office, just as one example, all the things that Biden and his administration said that Trump would do in the run-up to the election, all the things they feared for democracy, and they've done, or just about all of them. So, narcissism isn't a left or right issue. It's an individual issue, and Trump may be a narcissist. I don't know, but it doesn't really matter. He's in the White House. He's going to govern things his way, and we got a taste of that. We've had 4 years of the man, so we know kind of how this is going to be. We just don't know what variety of the madness we're going to get. It's going to be interesting and entertaining to watch. It's going to be frustrating and infuriating. It's going to drive some people who can't understand that politics is politics, and as much as you might hate Trump, there are people that hate your guy just as much and just as irrationally in many cases. We just got to live with it, and it's not going to be easy. I don't think it's going to be a 4 years where you can just exhale and go, I'm just not going to read the news and I'll be fine. I don't think it's going to be that way at all. I think a lot of things are going to come to a head in this 4 years, politically, geopolitically, financially, economically. I think a lot of these things are going to happen in these 4 years, and we've got to find a way to get through that. And as I say, I don't think it's going to be easy at all.
Certain sort of power structures at a geopolitical level are shifting and evolving. We've spoken about Trump and China, the US and China, but there are other sort of emerging actors. I was at the Future Minerals Forum in Saudi Arabia, in Riyadh, last week, and Saudi Arabia is making a big push to become a much more relevant player in the mining and resource space, both in terms of inviting companies in to exploit resources in Saudi Arabia, but also using its oil-based financial power to go out and be active in the minerals industry beyond its borders, which begs a question. Is the West losing its influence in the natural resource space?
Well, I think the Saudis are doing what they should have probably done a long time ago and diversify. You know, they've had all their income coming from energy, from oil, and they've had this simple game going for 75 years, right? We pull oil out of the ground, we sell it, we take the dollars, we put it in treasuries, rinse, repeat. And now America is an exporter of oil. That's their biggest customer gone. Not gone completely, but gone. So they're having to rethink the way they are in that kind of food chain of energy. They're looking east, they're looking to China, they're looking to other countries in Asia to replace that demand from the US. And that means they've got to rethink the way they use their reserves. And so, when you look at the way the world is going, solar, wind, all these renewable energy sources, which, they're a long way from being able to take over oil. So there's a long lead in here. And the Saudis are doing the smart thing. They're making sure that their future isn't 100% tied to oil. It's exactly what I'd do. It's exactly what they should have done probably a long time ago if they'd been really forward-thinking. But that game was such a lucrative one for them for such a long time. And the fact that America, thanks to fracking, so quickly went from dependent on Saudi Arabian oil to being able to become the biggest exporter in the world, has obviously caught the Saudis by surprise, and they're adjusting and they're making changes they need to make. So it's difficult to fault the strategy of MBS in terms of what he's trying to achieve. How successful they'll be, I don't know, because they've got a lot of kind of PR problems that they have to deal with as they try and integrate into the world a bit better. But at the end of the day, money talks. The Saudis are incredibly wealthy. They're not shy about spraying that money around where they need to, and that talks. And so they'll have a better chance than most to get the things they want done.
It'll be interesting to see how that develops. One last theme I'd like to borrow from your podcast with David Murray. You spoke a lot, or David spoke a lot about linear and lateral thinkers.
Yeah.
Now, we're here at VRIC, a mining investment conference or mining exploration conference. Most companies have linear thinkers running them, just following the herd, following the current investment hype, going lithium or critical minerals or whatever the theme of the day is. But there are some impressive lateral thinkers out there that have, I spoke with one earlier, Ross Beatty, founder of many, many companies serially successful in copper, gold and silver. Now, when you look at the mining space, who do you see as perhaps an emerging lateral thinker, someone that, hey, this person looks good and worth following?
That's a tough one. That's a tough one for me. I don't know. I don't know who I would put. Who would I put in that category? Yeah, I don't know. It's a really great question, Paul. It's something I'd need to give some thought to. But one thing I do know is that the mining industry, resource industry, it requires lateral thinking because you're constantly presented with problems. You're constantly having things thrown in front of you that challenge you to find workarounds, to find ways to get around problems. So, the resource space is filled with lateral thinkers. I think a lot of investors in this space are linear in their thinking because they expect 10x returns from mining companies. They expect from a tip they get that theirs is going to be the one that goes up, and makes them rich. And they think that things are very linear in that you buy the shares, they hit oil, they strike gold, they do whatever, the stock goes up 10 times, I sell it, I'm rich. It's that simple. Mining is an incredibly lateral business, and you have to be a lateral thinker. So, trying to single out the odd executive here or there in the mining game who's particularly lateral, I just don't know that that's possible. But people like Ross, who I consider a good friend, is a serially successful mining entrepreneur, and to be that, to not just have a lucky strike here and make a company and move on, takes an extraordinary amount of so many things. Resilience, ingenuity, problem solving, intelligence, street smarts, empathy. All these things you've got to have to be able to do that once. Never mind to be able to do it 6 or 7 times like Ross has. And this business, this hall we're in now, is littered with people that are forced to think that way. So, I don't think it's fair to single out one person here or there. I think the industry is filled with them.
Fair enough. Now, we're at the start of 2025. What's your investment outlook for the year for the natural resources and in general, indeed? Where are you putting your money and why?
Look, I've been consistent for the last several years. I've been taking risk off the table for probably 4 or 5 years. And it's amazing people say, well, you've missed out on this crazy run in the S&P. But the gold that I've been buying over those years, as I've got more and more concerned about where we're headed, has done phenomenally well. It's performed brilliantly for me. It's not left me feeling that I've missed out. I've slept very well, and I think that's going to continue. I think this uncertainty, this volatility is going to continue through 2025 and probably escalate and get even trickier to navigate. So I want to do the best I can to earn safe yield. I don't think there is such a thing as safe yield anymore, but trying to find a sensible way to make 6, 7, 8%, which shouldn't be impossible to do right now. But as I was talking yesterday to some people, doing that in public markets might be tricky. Finding private investments to make, and I don't mean throwing money at private credit or private equity, but finding businesses, local businesses that that need to raise capital and have a good business and the cash flows are great and they can easily pay off a 6, 7, 8% coupon. And reimagining the way that you think investment is. Everyone thinks investment is logging onto their Yahoo Finance account, finding the 3-letter ticker, putting money in their Robinhood account or their Schwab account or whatever, and buying the shares. The whole world needs finance.
It's more grassroots, sort of, as it was in the past, perhaps.
Yeah, and the beauty of that, the beauty of investing away from public markets, is that if there's a bad day in public markets, you don't get remarked 20% lower. If you lend money on a debt basis to a business that that has a good solid business, it doesn't matter what the equity markets do. You're going to get your 8% paid back to you. You need to make sure that business is going to have a degree of resilience against the problems that you think are going to come. For me, it's potentially inflation. I want to make sure that business is maybe not inflation proof, but has a good buffer against inflation. And go back to the practice of investment, not buying stocks. Buying stocks and investment are two different things. And people talk about investment when what they mean is buying stocks, and people tend to buy stocks instead of investing in company and businesses. And you buy a stock because you think the price is going to go up, and you're going to sell the stock higher. It's not a case of I want to own a piece of that business because I think that business is going to do well, and through that business's success, I'm going to get a share of the cash flows, and my investment's going to grow. It's a very different mindset. And I think it's something that people need to get back to doing.
Well, thank you very much, Grant. It's been a fascinating conversation. Wishing you a prosperous 2025. Grant Williams, thank you very much for joining us today.
I'm grateful for you having me, and I will buy you a new tie before we do this next year.
We have a lot more to come from the Vancouver Resource Investment Conference. Stay tuned and hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.